Hey guys, it's a market update. We have to be really honest about exactly where we are right now. This 95 to 100 level, this right here, you can see on the chart that there's a lot of chop and trade around this level, and we're coming right into this, which is a resistance. If we look at on-chain, you can see the vast majority of volume around this level, 95 to 100,000. So there's a lot of volume that we have to get through and trade through, because there's a lot of traders here, maybe people in a short-term loss looking to get out as we just go a little bit higher. So we're going to chop around here maybe for a bit. We have to get through a lot of supply to actually go on to the next level. So you need two things, right? You need the supply to actually get chopped through and traded through. So you get new holders at this level looking to hold. And then you need a positive catalyst. I'm not sure it's coming right yet. Hopefully before summer. I think the politicians in the States, they want to get a lot of things done before the summer, and they will go on holiday, right? And then they start again in the autumn. So we may have one more push before the summer, and then things get quiet. Now, I've updated the crypto course as well, my macro updates here, my portfolio and my holdings, and analysis on strategy. If you've got the course already, completely free for you. There's also a discount as well. If you type BTC at checkout right here, 20% off. All updates for free forever, private Discord groups as well. I'll link it below if you're interested. Over the next few months then, what are some positive catalysts we can trade and that can maybe see us churn through this supply and go higher? You need some risk taking in markets for buyers to come in and just buy through all of this volume, right? Turn 95 from resistance into support and then go higher. So what's gonna move us there? So on the macro side, tariffs and trade deals, you need to trade at least some trade deals done and for the market to actually like those. And that can encourage more risk taking and flows into the stock market. For example, the NASDAQ, if that goes up 5 to 7%, Bitcoin can get dragged up as well, churn through that volume, and then turn 95 from resistance into support and then go higher. I'll lean on the side of them getting done because, well, Scott Bessent is saying they're really close. We're going to get some done. We're going to announce. I think they'll want to get at least a few done before summer, and that's pretty good news. They need to create GDP. You can't just tariff and tax everyone because GDP shrinks when you tax people, right? Taxing people doesn't increase the amount of money earned in the economy, right? You're just taxing and paying off debt, but that creates a drag on GDP. You need to create GDP. You need GDP higher. And so they want to get these deals done. So maybe some before the summer. On the crypto side, a couple of bills are coming through. I don't think these really change things too much, not for Bitcoin. Bitcoin doesn't care about this, but this is for crypto, really. It's market structure. DeFi protocols exempt, clear decentralization test. That may encourage some more investment in crypto. I don't think it's important short term. This is more important, which is the stablecoin bill here, which apparently isn't doing too well. In crisis with key Democrats backing away, this is all a negotiation where, you know, maybe some other parts of the bill put in some things that Democrats want, etc. Stablecoins are a gimme, right? It's an open goal. The US requires debt creation. They need to sell that debt. Absolutely, right? You have a government which spends more than it earns and is almost impossible for them to earn more than they spend. Maybe they can tariff everyone, but that drags GDP down. It creates more issues. Stablecoins are an open goal because these are new buyers of debt, where all of the old and previous buyers don't want that debt anymore. You need buyers of the debt in order to sell it and create the currency units that you need to pay for all of your outlays because you're not earning the tax revenue to pay for them. And so to block this is absolute insanity for me. Maybe it's just a negotiating tactic. The US needs stablecoins and they need to regulate them and increase the supply so they can actually keep selling this debt. In any case, these two things, not that important for Bitcoin. If you get macro risk on, Bitcoin's going to go way higher. But for crypto and for the US, they need the stablecoin bill. And crypto bill, again, it's quite small, to be honest, in the big scheme of things. I'm not sure it's going to pump things short term. The main thing is macro. And we need risk on to get through this. And trade deals is the risk on that we need. Also, not great news is that a lot of these strategic reserve bills are getting rejected at the state level. I just think we're way too early. A politician just doesn't want to take the risk. Their number one priority is keeping their job, and it just doesn't seem like they're ready yet. And so the federal government actually buying Bitcoin for a national strategic reserve just sounds way off at this point, right? Like, the reason he said that is because he got paid money during the election cycle by Bitcoiners and crypto people who donated hundreds of millions of dollars to his campaign. And they said, this is our issue. We'll donate hundreds of millions and you can put it on the ticket. Now, that was great for all us as well if we hold Bitcoin and crypto, but it's just not going to go through the process, is it? Right? It's way too early, and it's a risk that these politicians just don't want to take. So that's something we've got to deal with this cycle. I don't think it's a major issue either, because currency is going to get debased, markets are going to go up, and people are trading Bitcoin anyway. Let's keep this for us for now. We'll wait later. If you're a long-term investor, it's going to happen at some point, but maybe not in this cycle. Talking about long-term investing though, as we move into the Bitcoin era, and after Buffett has retired, had a great career, has made huge returns for Berkshire, and investing in the stock market and cash-generating businesses, as we move into the Bitcoin era now, it's very clear at this point that the vast majority, if not almost all returns in the stock market, are simply pricing in currency debasement. Over an entire economy, if you have a stock market, and the stock market is predicated on growing revenue, right? You want to grow revenue. Now, some companies can grow revenue versus others if they're more competitive in a certain sector. You can grow your revenue as the other revenue of the other company decreases. But over an entire economy, how can you increase revenue consistently if there's no more money created? You can't. On a net basis, if there's the same amount of money, the same amount of currency units that you can chase, you cannot increase the amount of revenue over that economy. It's impossible, because that's the amount of currency units, right? So it should stay the same. But why is it that revenues just increase and increase and increase every year? It's because there's more currency units. But as we can see from gold versus the S&P over the last 20 years, which have around about the same price performance, that means that all of that effort to chase currency isn't producing returns over and above a store of value, because the vast majority of returns are simply pricing in the debasement of the currency that you're valuing these things in. 14% per year, global fiat monies, that's what they increase at. 14% inflation, currency debasement per year. In the US is 8%, gold 1.5 to 2, Bitcoin 0.8 and declining to 0. You would have seen this chart if you're in crypto. So in 23, there was 900 trillion of global wealth. 900 trillion what? Currency units. Now it's 1,000 trillion. What's that, a quadrillion? So over those few years, where's that wealth come from? How can you price that? The only reason the wealth has gone up is because there's more currency units to value it. How many more houses have been made during that time? If there's been more houses than the demand, shouldn't the price go down, right? So what we're doing here is pricing everything in currency units that are debasing, and that's the price appreciation of them. If you look at performance of asset classes over time, on the right-hand side here, since 2011, right, the only thing that has gone down in value is commodities, right? 1% down per year, despite currency debasement. This is in USD, so let's say it debases at 8% a year. Commodities are actually getting cheaper by 9% a year. So we should actually be getting wealthier by doing nothing. If our currency wasn't debasing itself, if our currency was just flat, we should actually be getting richer, because we can dig these things out the ground much more efficiently. The real way to measure wealth is how much wheat is produced per capita, how much corn is produced per capita, how much XYZ is produced per capita. That's real wealth. You can't measure that via fiat currency. So you need a neutral reserve asset to measure this. Gold has performed the same as the S&P over the last 20 years. Bitcoin will as well, because it's a store of value, and it's the best one because it has no inflation. So the entire returns of most of these is simply fleeing the fiat currency. No one wants a fiat currency, not even the governments that create it. They create it and proliferate it throughout the economy and spend it in a profligate manner. The trade of our generation, as we move from Buffett into Bitcoin, right, is the realization that we just need a safe money that doesn't inflate, and it will price in all of the abundance that is going to be created through AI and robotics and everything else. This is it, right? This is the asset to be in. It's performing better than everything else, but it will still, when it matures, price in all of that nonsense. Everything else debases, Bitcoin doesn't. Massive respect for Warren Buffett and what he's achieved at Berkshire. Perfect career, huge investment returns. And before stepping down, he actually gave this speech here. It's 2 minutes. I'll link this below. He perfectly described the issue that we all face, which is currency debasement. He perfectly described how national currencies get debased and you lose purchasing power. You can't hold them. They become untrustworthy. That's 100% track record for every single currency ever created, including gold, where they used to clip the corners off the coins, right? Sound money. They used to try and put things that weren't gold in there, drop it. And if it makes a sound, it's gold. If it doesn't, then you've tried to scam me, right? This is the most important thing. National currencies get debased. Human beings cheat. The only way to stop them is to enshrine the rules in a protocol that can't be changed. That's Bitcoin. I think that's the solution. I know Warren Buffett isn't going to accept that Bitcoin is the solution, but Bitcoin is going for long-term store of value. It's going to demonetize some of this market. It's not going for art and collectibles. It's going for bonds, the bond market of people that want to store their value over time. Total bond market returns 2.1%. Long duration treasuries 2.3%. High yield bonds, taking risk in companies that may not pay it back, 4.7%. But the debasement rate is 8%. That's the scam, right? You're losing all of your money when you buy bonds if you keep them for a long time. Bitcoin is the solution to currency debasement. It's so obvious, and it is monetizing. And that's why I just think it will continue to monetize and monetize and monetize. It is desirable. And for people that are young especially, putting money in bonds is a no-go. You're just going to lose money if you've got a 20, 30-year time horizon. You have to invest in something else. Bitcoin is going to demonetize some of the demand for bonds. That's what we're in. Currencies debase. Every national currency gets debased because the government spends more than it intakes in tax. Because we all want it, right? Spend more on me. Spend more on me. Debase a currency. Bitcoin is the trade of our generation to demonetize this currency debasement. 20% discount for the Crypto Investor course until June. You start BTC, you can get a discount there. You can also trade on Bybit as well. Deposit and trading bonus on Bybit up to $30,000. Link in description for that as well. I'm James, this is MoneyDG. Cheers for watching, and I'll see you in the next one.